The Toronto real estate market, against all odds, somehow the prices are still baffling high. Yeah, even with the amount of homes essentially doubling up, meaning inventory has doubled from the start of the year until now, prices are still exactly where they were a year ago. They did not drop. And also, despite rates being as high as they ever in this year, I know we're talking about rates coming down now, but how do we survive an average of 6% mortgage rates, 8% qualifying rates, and the doubling of inventory, and the Toronto real estate average price does not even budge? This is exactly what I'm examining for you in this year's end of the year review, which is one of my second favorite videos I love to make outside the prediction ones next week. So stay tuned. It's going to be a good one as we wind down the 2023 year. And a lot of us will be gathering for, holidays or get-togethers, whatever the politically correct way of calling it. But I know I will be hanging out with my family a lot. But if it's like you guys, real estate gets brought up quite a lot, right? Also maybe because I'm in the industry. And plans are usually made and discussed at this time. So this is why I personally noticed a huge increase in the amount of inquiries to have a call with me for the new year, because they want to bounce off the ideas of what they plan to do in 2024 in the real estate market. And if you want to bounce your plan off me in the 2024 market, and you can do so by booking a call with me in the link right here. It's www.chatwithzen.com. There are a few spots left before the end of the year because I also have holiday plans. I want to take some time off. So make sure you get booking. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run and operate a RE/MAX in the Greater Toronto area, on top of making awesome educational real estate content just like this one for you. If you enjoy some of the content we do me a solid and like and subscribe. And wow, 2023. See you later. Peace out. We're going to wind down and discuss how on earth did the Toronto real estate market survive a doubling of inventory and prices didn't drop? Wow. Right? I'm going to go through chronologically what's happening. So in all the charts I'm going to be presenting you over here, I'm going to show you the 2022 numbers as well as the 2023 numbers to give you some context to both years, because they were both bad and volatile, but prices didn't really drop too much. But we did have that huge spike, and because rates came down and prices went up. And you'll see that in the first chart, where essentially the active listings were consistent climb in 2023. It just went zoom. And we basically doubled up from the start of the year until now. Now you see that little bump from September to August? That was basically the big fall market dump we got for inventory. That was just like boom. And it continued in October. Then it trickled it down, and now we're slowly coming down, which again, don't celebrate. This is just a seasonal norm because, like I've been saying before, sellers who don't need to sell delist, and they try again in the next selling season, which is spring 2024, right? Spring, hope is eternal. The question on everyone's mind is how much inventory is coming online in the spring, and what the buyer sentiment will be given where rates will be. And I said that exact same statement in the summer going into the fall of 2023. That's the magic question. Remember that for this video. Now that you understand this number, allow me to explain to you the magnitude of the number of listings we have. So if you look at this chart here, again, don't be scared of the many, many lines, right? I'll explain this to you. The blue bars are basically the active listings in November, historically going as far back as, the board track data, which I think is like 96. Now, while 2023 isn't the most inventory we've ever seen, if you look at the orange line, that's the percentage of inventory relative to the start of the year in January, right? So if you look at the right axis, you can see how much inventory we got from the start of the year to the end of the year, basically the end of November. And again, I generally like to use November because active listings do fall off a cliff in December, because December tends to be a really bad month, and it's also statistically not important because holidays and mainly delistings, right? So you can see that over here, that although this wasn't the highest peak on the orange line, symbolizing the most increase of inventory from the start of the year, so January all the way to what I call the end of the year, November, it is a very high number relative to the number of listings we have, which is the blue bar, right? So you can see we almost got a 200% increase in listings, or essentially doubling from the start of the year in 2023 to the end. And the only reason why 2022 and 2017 had such a ridiculous peak is because quarter one in each of those years, we had the least amount of listings remaining because it was stupid hot of a winter, right? Like things were just blindly going at that time. Everything was being bought. And then eventually we got some kind of government intervention that basically hit the brakes real fast on the market, right? So if you don't remember, 2017, January to April was crazy until the foreign buyer tax came, and 2022 was crazy from January to March, and then it stopped because of the hiking cycle, the rate hiking cycle. So if you remember those two data points, which again, I would say are anomaly, 2023, the almost doubling of inventory is a bit concerning. Yeah, right? If you agree with me. But the question I posed to you in the beginning of the video was, how the heck did we survive this, right? Prices didn't come crashing down, given the inventory basically doubled. Rates are slightly coming down now, but they, for the most of the year, were super high, especially in the fall, right? Makes no sense. Now let's move on to prices. You can see that in the next chart over here that the average price on this chart right now looks relatively flat. And again, I want to point out that the highest price point was February 2022. But given like how high the numbers are right now, because we're all in the over millions, if I zoom into these charts, it will show you more the volatility we got, which is this chart. So you can see that the prices took a big drop. The biggest drop was from February 2022 to July 2022. And that 5-month span, we had a 19.6% drop, which is almost 20%, was basically the crash, right? And I made a video about that, I think last year. And since then, it's been essentially trading sideways with some minor exceptions that we had in the spring in 2023, when the US had their Silicon Valley Bank crisis, hiccup, whatever you want to call it. And then the fixed rates came down to the 4s in the spring. So that spurred one of the biggest spring accelerations we have. But once the Bank of Canada started raising rates again, you can basically see that prices came back down, right? And this is exactly why there's a cohort of people who believe that once rates hit the point where there's a 4 in front of it, the market will come roaring back, because we just saw proof of that in this year, 2023, in the spring market. See what I mean? Now, circling back to the question I posed again at the beginning of the video, if we survived a doubling of inventory and prices still didn't move at the end of the year, just how much inventory will come back in the spring versus where rates will be before the prices actually move whichever direction, right? So this is how I look at it. If there's too much inventory, even with slightly lower rates, it won't make prices go up, right? But if there's not much inventory, maybe they'll come back on the market because they're not desperate, or that rates come down really, really, really fast, the inventory that we have remaining will get absorbed, and then it'll give room for the prices to go up, right? Again, nobody has the answer to this right now. And if they do, they're full of crap, almost swore. Now, let's look at the sales. When you look at this chart, obviously 2023 looks a little bit soft compared to 2022, but only slightly because 2022 had that huge boom in the first quarter, like we said earlier, right? But if we compare the number of sales historically, both years were just crap, okay? We haven't seen sales as bad as 2022 since 2008. And we all know what happened in 2008, right? The GFC. So when 2023 is worse than 2022, you can imagine how bad it was for sales. And again, here we are. Prices didn't come down as much as we thought they should have based on these sales coming down. They basically are the same where we are last year, about a few $1,000s. Now that you see the dynamic between inventory, number of like properties for sale, and the actual stuff that sells, I can talk to you about the months of inventory, which has always been the biggest indicator I use to determine the direction the market is heading into, whether prices are going up or prices are going down. And you can see that the rapid increase in inventory from less than 1 to 3 in the second quarter of 2022, that's when the rates spiked. We got that 1 whole basis point in July. That's also why prices came crashing down at that time. From there, it basically stayed between 2 and 3 months of inventory, which is technically a seller's market. But I can tell you for a fact that it felt like a buyer's market at the time. It's just that nobody was listing their properties because they were allowed to negative amortize by the banks, and which is basically backstopping the entire market at the time. Then our second quarter of this year in 2023, the months of inventory dropped below 2 again because the rates, the mortgage rates, the fixed rate specifically, came down to the low 4s for a time. Do you see the pattern? But once the rate hike announcement was made in June for variable and then the fixed market went back up, the months of inventory ballooned back up to what I think was called normal for the market given where the rates were, somewhere between 2 and 3. Then in September, we got that giant surge in listings and the sales were historic lows, like 20-year lows, okay? Which is why it pushed us into that red box into a more balanced buyer's market. Now, technically speaking, 4 is a balanced market, not a buyer's market, but it operates one in Toronto because this is not what we're accustomed to, right? So while months of inventory has decreased, and this is mainly because people are delisting their properties, even starting in November, but it's way worse in December, it is still quite elevated as we head into the new year. So circling back to my question I asked in the start of the video again, how did prices stay the same when the months of inventory is increasing, right? Are we going to see the months of inventory increase? Because if we get in the burst of listing that we saw in, say, fall in 2024 at the start, or even spring, can we see enough of a rate drop that will spur the buyer demand back to reduce that month of inventory? And that's kind of like what everyone's trying to balance out. And that's what everyone's wondering. And back to what I said earlier, nobody knows, right? And finally, I superimposed the months of inventory onto the zoomed in average price of Toronto in this chart to show you why it's very important to track this metric, because it basically allows me to kind of look 60, 90 days into the future to see which direction the market is going and where the average prices should be following relative to the month of inventory. And as the months of inventory increased rapidly in 2022 to second quarter, prices came crashing down. You see that? And as it chopped sideways between 2 and 3, prices also stayed around the same. See that? And then in spring 2023, when fixed rates dropped with a 4 in front of it, the months of inventory also dropped, which meant prices went up. You guys see the pattern? And now we've seen the highest ramp up in months of inventory for a very, very long time when I was tracking the data, I think not until like 2008, but prices are the same. Why? Just why, right? And this is what I can conclude, right? The real estate bulls will argue that it's because the Toronto real estate market is super resilient. Now, the real estate bears will argue that there's a crash that's coming and we're going to have a 1990 style crash. I personally think it's like the answer somewhere in between. And like I've been humbled enough by all this volatility in the last few years to know that nobody knows, right? And that's why I think it's going to be somewhere in between. And if they tell you that they know for sure, I would say they're full of crap, right? And this is exactly why I'm showing you how I'm watching this data. And it's exactly why I'm watching the months of inventory level and the sentiment from the boots on the ground data to try to match it relative to where I think the market's going to go in like the short-term future. So if I see a lot of inventory come in online in January and very little buyer demand in the new year, I know that months of inventory is going to be increasing and I should expect prices to drop. Now, on the contrary side of this is if we don't get as much inventory as we think, and that rates may be slowly coming down, even a tiny little bit, I think the buyer demand is going to come back. It's not going to come roaring back, but they'll come back off the sidelines. And I think prices may stay the same. And the third scenario is unless the rates drop so much, so fast, and nobody relists their home that the inventory from the highs and doubling of November, then I would say prices will ramp up rather quickly. And I would say the distribution of probably on that is very, very low. But again, I could also be wrong on this because, black swan events happen and new inputs means new outputs, right? And this is exactly why I think it's so difficult to make a decision on your real estate by looking at, call it the macro data, because you have to isolate locally to what you're trying to do in that local market so that you tie it with your personal reasons for what you're trying to buy or what you're trying to sell while understanding this macro data so that you can make the correct decision. And that's really, really hard when you put emotions into play, right? And I really think from the local side, certain segments of the market in 2024 will move and certain segments of the market in 2024 will not move. But more on that in my prediction video next week. But if you aren't sure what the timing is for your next buy or sell, you can book a call with me using the link right here. It's www.chatwithzen.com. And yes, it is the holiday, so I only have, again, like I said earlier, a few limited time slots available because I too also want to take a holiday break. So make sure you go make that appointment before the holiday's over or any of the appointments run out. Until next time, your move, your future. See ya! Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?